Welcome to the Deep Dive. Our mission, as always, is to cut through all that daily noise, that information overload, and really give you some actionable insights. So today, we're doing something a bit different. We're taking a snapshot, just looking at CoinMarketCap's other articles published on June 17, 2025.
Right.
And the goal here, well, it's to turn just a quick scan of those headlines into something you can actually use, a genuinely well-informed understanding. Maybe find some sort of surprising facts in there, too.
And that really is the value, isn't it? Taking what looks like, a random collection of news items and seeing how they connect, finding those underlying trends. It's about understanding why this stuff matters to you, not just what happened.
Exactly. Like you might have seen that big headline buzzing around, Paradigm challenges U.S. prosecutors in tornado cash case. Super important legal stuff for DeFi, definitely.
Oh, absolutely. A major case.
Yeah, and we'll keep tabs on that one for sure, maybe for another deep dive. But today, we're pulling on a different thread from these specific articles, looking at things that give us unique insights into the market right now.
Okay, let's get into it.
All right, let's unpack this. Kicking things off with a couple of stories about specific tokens making some noise. First one, AltLayer, A-L-T.
Okay.
So its token had a sharp rally Monday, June 16th, like up 35%, and it formed what traders call a notable breakout candle. Big green candle on the chart.
Strong move.
So what was behind that? What caused such a big jump? And, are these kinds of surges usually constatable?
Yeah, good question. So the main catalyst here, pretty clear cut actually, was its listing on Upbit. That's South Korea's biggest exchange.
Ah, the exchange listing effect.
Exactly. It's a classic pattern. A major listing means more people can buy it, more liquidity, often leads to a price spike. But to your second point, sustainability. Well, that's the trick, isn't it? These listing pumps can be dramatic, yeah. But long term, it really comes down to the project itself, the fundamentals, the tech, ongoing development, not just the initial hype. Prices often pull back after that first rush.
Makes sense. So potentially short-lived fireworks from just a listing. Okay, let's shift gears then. Chainlink, LNK.
Okay, LNK.
It's seen a bit of an upward move, about 2.93%, bringing it to around, $13.69. So what's the vibe around Link now? What are the technicals saying?
Well, market watchers are talking about an emerging technical pattern for Link. That plus a sort of growing feeling that momentum might be coming back.
An emerging technical pattern. What does that actually mean, like in simple terms?
It basically means traders are seeing shapes or signals on the price chart. Could be a certain kind of bottom forming or maybe breaking out of a range. It was stuck in things they used to predict or try to predict where the price might go next. It suggests, maybe the mood is shifting from bearish, pessimistic, towards something more optimistic, more bullish.
Gotcha.
And we did see one analyst put out a projection, a target range of like $32 to $38 for LNK.
Wow, that's quite a jump from $13.
It is. But, and this is really important, that's just one analyst's view based on these patterns. It's absolutely not a guarantee. Think of it like a potential roadmap for traders maybe, but definitely not investment advice for everyone.
Right, always got to remember that. Okay, so we've seen individual tokens move on news and signals. But these moves don't happen in a vacuum, do they? The big players, the institutions, they often set the tone.
Oh, definitely. Their actions can ripple through the whole market.
And that brings us to some pretty big institutional news. This is where it gets really interesting, I think. Metaplanet.
Ah, yes, Metaplanet. They've been betting big on Bitcoin for a while.
Exactly. And they just doubled down. Big time. They just bought another chunk of Bitcoin, bringing their total holdings to a landmark 10,000 BTC.
10,000 Bitcoin. Wow.
Yeah, through a $117 million acquisition.
Right.
That's a lot of Bitcoin. What does that signal, really?
Well, the really eye-popping part, the kind of aha moment here, is that with this latest purchase, what was it, 1,112 BTC?
Yeah, something like that.
Their total Bitcoin stash is now bigger than Coinbase's corporate treasury holdings.
Whoa. Bigger than Coinbase.
Bigger than Coinbase's own holdings, yeah. And get this, they didn't just use spare cash, they issued bonds. A $210 million bond issuance specifically to fund more Bitcoin buying.
So they're borrowing money to buy Bitcoin.
Essentially, yes. Which signals just incredible institutional confidence, doesn't it? They see Bitcoin as a core long-term strategic asset. It's a profound bet on its future value.
That really does underline the confidence. But, when big money like this moves in and crypto gets more mainstream.
The regulators pay closer attention.
Exactly. Which leads us to A pretty significant warning about privacy that popped up in the news. And just to be clear, we're just reporting what the source said here, staying impartial.
Right, important distinction.
So Senator Warren issued a warning. She raised concerns about the Genius Act, saying it could let tech billionaires create stablecoins that track people's spending.
Stablecoins and tracking. Okay.
Yeah, and just quickly for listeners, stablecoins are those cryptos pegged to something like the US dollar, meant to be stable in value.
Right. And the core issue raised here, based on the source, is this intersection of new financial tech, potential laws, and, well, privacy. The warning focuses on the possibility that certain stablecoins, maybe depending on how they're designed or regulated, could enable tracking of spending habits on a, potentially massive scale.
So the concern is about the data collection aspect.
Pretty much. The potential for surveillance baked into the financial system. It highlights this ongoing debate. How do we innovate financially without sacrificing individual privacy?
It's a huge question.
It is. And it's worth noting, while some stablecoins, maybe centralized ones, could facilitate data collection like banks do now, the underlying blockchain tech can also support privacy. It really depends on the implementation and the rules put in place. The tech itself isn't inherently good or bad on privacy, it's how it's used.
A really critical point. Okay, so finance, regulation, privacy, huge topics. But crypto isn't just about money, is it?
Not at all. The underlying tech, blockchain, is finding uses all over the place.
And we've got a great example here, moving into a totally different field. Music.
Ah, interesting.
Yeah, a company called Vibrate. They're offering blockchain-powered music analytics for artists. And apparently it covers something like 11 million artists.
11 million. Wow. Okay, so what's the blockchain angle here? What makes it unique for artists?
That's what I was wondering.
Well, connecting this to the bigger picture, it shows blockchain moving beyond just currency. The unique bit, the blockchain-powered part, likely comes down to transparency and verifiability.
Okay, how so?
Think about it. Blockchain creates immutable records. So artists could potentially see exactly how their music is being streamed, where it's popular, maybe even track royalties more accurately.
Without relying on a traditional label's potentially opaque accounting.
Exactly. It's about giving artists clearer, verifiable data about their own work and audience, maybe helps them get paid fairly too. The source mentioned positive reactions, suggesting artists see value in this kind of decentralized data approach.
Fascinating. Empowering artists with data. Okay, so we've seen finance, regulation, music. What else? Well, there was one more slightly unusual item. Polymarket.
Ah, the prediction market.
Yeah. Apparently bets on whether the U.S. would strike Iran surged really high, up to like 67% probability based on the market.
Wow.
And then dropped off quickly. Just a weird snapshot of geopolitical anxiety playing out, I guess.
It's a fascinating, if slightly morbid, use case, isn't it? Prediction markets like Polymarket essentially crowdsource probabilities. People bet on outcomes. Right. So that surge and drop, it likely reflected real-time reactions. Maybe a news event happened, or tension seemed to spike. People bet accordingly, and then maybe things cooled off or new info came out, and the perceived probability dropped. It's like a real-time sentiment gauge, albeit a very specific high-stakes one.
A real-time sentiment gauge.
Yeah.
That's a good way to put it. Okay, so, wow. We've covered a lot just from one day's other articles.
You really have.
What does it all mean? Well, hopefully, taking this deep dive through what seemed like random news has given you a clearer picture, cut through some noise. We went from, AltLayer's rally
to Metaplanet buying up massive amounts of Bitcoin,
to Senator Warren's warnings on stablecoin privacy.
then music analytics with Vibrate, and even those Polymarket predictions.
Well, from just that single snapshot, it really shows how dynamic this space is.
It absolutely does. The landscape changes incredibly fast, and it just highlights how crucial it is to, pull out the key insights from all these different signals, which I think leads to a good question for you, our listener, to think about.
Yeah, definitely. So here's something to chew on. Given the incredible speed we've seen today in all these diverse applications, digital money, sure, but also institutional strategy, music analytics, even gauging geopolitical risk. What's next? What existing industry, or maybe just some part of our daily lives, might be the next thing unexpectedly impacted or even, totally disrupted by this technology?
Good question to ponder.
Definitely something to think about. Thanks for joining us on this deep dive.